Finance Minister Nirmala Sitharaman in her Budget 2020 increased the cap on insurance cover on bank deposits from 1 lakh to 5 lakh rupees. The announcement was implemented by the Reserve Bank of India starting Tuesday last week. After the Punjab and Maharashtra cooperative bank scam dragged down the confidence of depositors, there was pressure on the government to increase the insurance cover, which was static since 1993. Though the deposit insurance cover has finally been raised, there are enough people on social media voicing their concern. You're watching Why Not Mint Money, and I'm Disha Sanghvi from Mint's personal finance team. After the finance minister raised the cap on deposit insurance cover, there were a host of arguments on Twitter on when the cover would kick in and what happens if one person has multiple accounts with the same bank. On this episode, I try to answer some of these questions. Deposit insurance comes into play under two circumstances. One, if your bank goes into liquidation, and two, if your bank is reconstructed or merged with another bank. Understand that the Deposit Insurance and Credit Guarantee Corporation does not directly deal with the depositors of a failed bank. In the event of a bank's liquidation, a depositor-wise claim list is prepared and sent to the DICGC for scrutiny and payment by the liquidator. The DICGC pays the liquidator, who is liable to pay the money to the depositors. The DICGC insures principal and interest up to a maximum amount of 5 lakh rupees. For example, if you had an account with a principal amount of 95,000 plus accrued interest of 4,000, the total amount insured by DICGC would be 99,000. However, if the principal amount in that account was 5 lakh rupees, the accrued interest will not be insured. In case of an amalgamation or merger of banks, the amount due to each depositor is sent to the transferee bank. However, understand that this is not applicable if two financially healthy banks merge. The rule is applicable only in case of a stressed bank. Now, there are various situations that could arise. For example, what happens if you have 3 accounts with the same bank and the bank blows out? These can be 3 different types of accounts, say a savings account, a fixed deposit account, and a recurring deposit account. Further, all 3 accounts can be in 3 different branches of the same bank. But should you worry? Well, not really. The reason you don't have to worry is because the deposits kept in different branches of a bank are aggregated for the purpose of insurance cover, and the maximum deposit insurance you would be eligible for is still 5 lakh rupees, but in total. Joint accounts, however, are treated differently. A joint account, irrespective of the number of holders, gets a cover of 5 lakh rupees. But if you hold 2 or more joint accounts, then here's something you need to keep in mind. Joint accounts are aggregated based on the ownership. If you have 2 joint accounts with the same people as the first and second holders in the same order in both cases, then both these accounts are considered together and you would get rupees 5 lakh in total for the 2 joint accounts. To give an example, a joint account of Amar, Akbar and Anthony is different from that of Akbar, Anthony and Amar, which is again not the same as a joint account held by Amar, Anthony and Akbar. Next, what happens if you have accounts in 2 different banks and both the banks go bust one after another? This could be a slightly far-fetched thought because practically no scheduled commercial bank in India has collapsed since 1960. Having said that, if such a situation does arise, then your deposits from each bank would be insured separately, which means your deposits from each bank up to 5 lakh rupees would be insured. Remember that DICGC, which provides the insurance cover, is a subsidiary of the Reserve Bank of India. All scheduled commercial banks, including branches of foreign banks functioning in India, local area banks, regional rural banks and cooperative banks are insured by the DICGC. However, deposit insurance premium is borne entirely by the insured bank. Hope I have tried and clarified all the questions that you might have about deposit insurance and what it means for the various kinds of accounts that you hold. That's all from us on this episode of Why Not Mint Money. Thanks for tuning in.